Nous poursuivons cette série d'interviews à la 23e édition du Private Equity Exchange et nous vous emmenons à nouveau à l'étranger. En réalité, on va parler d'Europe aujourd'hui parce que nous avons la chance d'avoir trois partenaires d'une firme canadienne d'origine mais qui est présente dans le monde entier, qui travaille quotidiennement aux côtés des fonds et des managers dans le Private Equity. Alors, je vais switcher en anglais et puis on commence l'interview pour une quinzaine de minutes pour vous faire un état des lieux du marché européen. Neil, Hendron, thank you for being with us today.
Pleasure.
Your partner in the London office, I guess?
That's right.
At GOWLING WLG. Thank you for being with us. Patrick Mousset, hello.
Bonjour.
You were with us a few moments earlier. You are a partner at Paris GOWLING WLG office. Thank you for being with us. And Michael Lamsa, Dr. Michael Lamsa, you are a partner in the same firm, GOWLING WLG, but in Germany.
Yes, in Frankfurt. Thank you for having me.
In Frankfurt, yes. So three countries, three realities in terms of market trends. Maybe we can start with that. What are the general trends you can see, you identify, and maybe the differences between your different markets in terms of, for example, of players, family business succession plan, and things like that.
For France, I would say that we're kind of a mature country, so we have a lot of LBO, primaire, secondaire, third one, and for 20, 25 years now, the private equity has been growing, and we have a lot of French funds, big French funds, pan-European French funds from France, and we do also have more and more investment from abroad, from the UK, but mainly lastly from US. And which is a bit different, I would say, in Germany or in the UK.
Neil, on your side of the Manche, of the channel?
Yeah, absolutely. So similar to France, the UK is a mature private equity market. We've seen probably a growing specialization of funds into different subsectors of private equity, leveraging the particular appetites of LPs to go into certain sectors, get exposure to certain sectors within.
But still in a platform strategy.
Still within a platform strategy, absolutely. But certainly with raising specific funds with a focus on certain sectors, whether that's ESG, certainly with energy transition focus, and those types of funds have seen a lot of traction recently. Also specific healthcare related or life sciences related funds as well. So targeting specific growth areas of the sector. But across the board, obviously, there's a very mature private equity sector in general.
And is this deep market you got in the UK? Because in France we're proud of calling ourselves the first continental market, but of course UK it is a great market for PE. Is the market also exposed to difficulties and correction in terms of fundraising and also in deal flow?
Yes, it is. We're hopefully seeing green shoots of coming out of that in 2024. We clearly had a combination of a high inflation and a high interest rate environment that was constraining deal flow. Similar to France, the vast majority of private equity deals are leveraged. Access to that capital in terms of the debt funding from mainstream banks and debt funds has been constrained, and the pricing hasn't really worked over the last maybe 18 months or so or 24 months or so, but that is coming back now. Interest rates in the UK are coming down, so they've hit their peak and are on their way down. Last week there was another reduction by the Bank of England in terms of the base rate down to 4.75. Inflation is at or about target in terms of below 2%, so we are seeing green shoots in terms of the right macro environments for deals to be done again.
Thank you, Neil. Michael, on your side of the Rhin?
Maybe to add to what Patrick and Neil already said, in particular in Germany, we see a lot of family-owned businesses, Mittelstand, as we say it in Germany, where the current owners need to do their succession planning, and obviously they can't or won't transfer the business over to the children, and then are looking for other investors, and then obviously private equity investors are one option.
Almost the only one.
Often the only one. And so lots of opportunities for primary investments of private equity funds possible in the future.
Which is the grail for GPs.
Absolutely, absolutely. And the second trend we tend to see is big corporates stepping up in the scene.
As corporate ventures?
No, conglomerates which try to streamline their business and sell, I won't say underperforming businesses, but businesses that are not so in the focus, not the core investment. And so this also gives lots of opportunities for private equity investors for primaries.
Okay, so carve-outs
Carve-out.
or assets, assets, I don't know what you say in English, but arbitrage, we say in France. So asset selection and what you want to, if you want to refocus on the core business
Right.
and stop maybe some diversification, and also the primary due to transmission, as you just said. Quite an interesting market, and of course the Mittelstand, we are all our markets in France and UK, we are all jealous of the Mittelstand, of course. Okay, what are the kind of deals that are currently occupying the advisors and the GPs in your countries? I'm speaking about platform deals with a lot of build-ups, of rollover, of, I don't know, continuation funds, things like that, GP-led?
Yeah, so in terms of hot sectors for GP-led transactions in the UK, professional services have seen a real uptake over recent years. So whether that's private equity investment into law firms, into accounting firms, or into wealth managers, and those, given the fragmented nature of those markets, they lend themselves to investing in a substantial but not market dominant platform, and then there's definite room to build up, through multiple acquisitions through an investment life cycle. So typically 6 to 10 acquisitions a year for some of these platforms, with a ability to really add meaningful value and benefit from obviously the arbitrage involved in both synergies whenever you're building these professional services platforms into a larger group, and also just market multiple arbitrage as well. So acquiring bolt-on acquisition, making bolt-on acquisitions at a lower multiple than you immediately then value the business at whenever it's acquired. So that's been interesting to see. And in terms of other sectors within the UK that have been active, the UK life sciences, in terms of pharmaceutical services and other services to the UK biotech industry, have seen increasing interest from private equity investors, and also interestingly increasing interest from US investors coming to the UK as well.
Patrick, in France?
It's a bit different. First, financial services are not that high compared to yours. We don't see, or we can't, I think, have like law firms being acquired by investment funds or being listed like in Australia.
No.
So
Right now we can't.
No, we can't. No. So we do have lately a lot of healthcare, obviously. Tech, education, brokerage. For instance, you see a lot of buy and build processes with these kind of businesses, and we also have a slowdown in terms of rollover of LBOs. So that's why you see a lot of refinancing. The difference with the UK is that we are around 3.5 and not 4 point something. So we are a cheaper financing.
UK, do not hesitate to come in France to get finance.
Exactly, and to be short on that, and we do also obviously have renewable energy. By the way, our firm is very well known in France, in Germany, and in the UK, and in Canada as well for energy, tech, and healthcare. And we have a lot of big clients in this environment, including venture side of these businesses, because a lot of healthcare also groups wants to take participations in businesses like that. Future of their businesses.
I think I can echo almost everything, but with a slight twist. In Germany, with a good mixture of platform deals and add-on transactions, and also a wide spread of sectors the firms are investing in. One that might stick out a bit are tech, software, IT, IP investments, but despite of what has been said, that's no further differences in Germany.
So we go on with you, Michael. On the process side, is it organized in auction, or and auctions are a thing in Germany, or is it more with another way of doing things?
I'd say it's also a good mixture. We see auction processes, in particular for the more interesting assets, but my impression is that a lot of funds want to do exclusive deals. So often processes start as a small auction, but with the aim of one of the bidders to get exclusivity. And this is on the one hand. On the other hand, we also see lots of transactions organized not in an auction process where the investor identifies the targets and then the process is started with just the target.
So it's quite similar the way we do work between France and Germany, because this preemptive for specific assets that an industrial player would have spotted, or a fund with a specific coverage would have spotted. Of course, everybody don't want an auction for something you really want. So it's quite similar. There is no differences.
There is a bit of the difference. First of all, I guess that in some funds, LPs are requesting now processes to be sure that the price is fair, especially if you do a preemptive. They don't want you want eventually not to pay too much, but everybody loves preemptives. But we are in in almost all the deals we've been working on. There is almost investment bank on that, also for the pricing on the side of the sellers. I guess that in family-owned businesses, they're not used to do that because funds are usually using bankers for sell and to buy. Maybe in Germany they don't know they don't know that much this kind of environment. And also with the refinancing right now, we see a lot of portable debt to be sure that we are financing right now, but we also are the management and the fund which owns the majority or not of the capital. They want to be sure to have a quick process. So refinancing with the portable debt is something that we see more and more as well, to be sure to accelerate and speed up the process.
Yeah, so the UK, the majority of transactions will be under an auction process. How long that auction lasts obviously comes down to
getting longer and longer.
Yeah, getting longer, but obviously, if somebody comes in quickly at the right price on a preemptive basis, it's still very possible. And with secondaries, for which I mean sales from PE, where PE is an existing shareholder, the need for some kind of third-party valuation, if there's a bilateral bid or a preemptive bid without proper other offers being made in order to ensure the right price is being paid, it's something else to take into consideration. But most transactions are done on a fairly typical two-stage auction process with exclusivity granted post second stage to a successful bidder. We haven't really seen, well, we don't usually see contract races down to the last minute. It does happen, but more often than not, there's a kind of an orderly auction process following which a successful bidder is selected.
How do you guys keep a good tension in the deal when the process can last for 12 months? It's impossible.
Yeah.
Or it's possible.
It can be difficult.
How do you organize the process on your side of the lawyer job?
So typically, from my perspective, acting sell side, a good process is a short process. And even if the transaction has been running for a long time, the period in which the lawyers are involved should be very short, ideally, and should be implementation only, because that's where you get momentum within legal documentation and, frankly, ensure that you kind of use that momentum to leverage the position in the documentation to your best advantage.
And you avoid too much psychology on the buyer side by going fast.
And it breaks my heart, but it reduces fees.
You don't have success fees in UK?
Not in the UK.
In Germany?
Not in Germany. It's not.
Too bad for them.
Yeah, we don't always, but we tend to have. But
okay, guys, we got 1 minute.
Okay.
And we had, I think, dozens of points to address. So what do we do? We talk maybe about the reinvestments of the management?
Yeah, maybe. I think that, we talked about this before that, but sorry to interrupt you because we have 1 minute left. The management side here in France, usually the trend and the market practice is to have around 30% of post-tax reinvested. And also the managers have a different weight in France than in other parts of the world. And we probably have maybe the only market where the management has a real say during the processes, and sometimes can even decide where to go and who to go with. I'm not sure it's the same in the UK in terms of, in Germany as well, in terms of how much you invest or you have to invest, and is the management as soft, powerful or powerful as it is in France?
Yeah, it's interesting, and it clearly depends on the company and on the management team. But I think that the trend, having discussed approaches with Patrick over the years, is there tends to be a greater level of power in the hands of management team in a French transaction than in a UK transaction. But similarly, a reduced level or expectation in terms of management's reinvestment. But it's more of a rule of thumb than across the board.
Okay. And what if we had to give a general percentage?
Between 10 and 20.
Okay, so it's quite lower. And I also heard in France, Patrick, during our interviews, that now we are more between 40 and 50%. So it's quite, it's huge. But you buy your own BP. So in the end, if you want to do a good sale, you sometimes you have to be in the next turn.
Yeah, I guess the proof of a good LBO, hoping that it's the more the management reinvests, the more he believes in a project.
Of course, even if it's cashing out everything.
Yeah.
Well, he tries to. Michael, in Germany?
In Germany, the portion that is reserved for managers is between 10 to 20%.
For reinvestment
For
after
reinvestment, yeah, and management has almost no say on the process, on the decision to which.
Because you're too much into the dialogue every day in Germany, and we know that.
Yeah,
so you sometimes
management
They always
distracted.
agree. They always agree on everything.
yeah. You know, sometimes you have to pay for sometimes. Well, thank you anyway for the three of you for being with us on stage today. Thank you, Neil. Have a good trip back to UK. Thank you, Michael. See you in Frankfurt next time we come for a TV show. Patrick, thank you very much.
Merci pour l'invitation.
We see you next year, of course, at the Private Equity Exchange 24th edition. Merci à tous de nous avoir suivis. Dans un instant, la dernière session et on vous retrouve donc avec les gens qui sont sur la plénière de clôture de la 23e édition du Private Equity Exchange. Merci à tous.